Hey guys, welcome to my YouTube channel at the Murkison Method. Today I'm gonna do a video. I'm gonna explain exactly what a wraparound mortgage, and then I'm gonna put it all together. If you haven't seen my previous videos, please go see it on private lending and owner financing. And today I'm doing wraparound mortgage, and I'm gonna show you an example of a deal that I did all three financing methods in one deal. But before I do show you that and give you all this great information, please like and subscribe my YouTube channel, share it. I am putting out free content every single day. All right, guys, did you know you can sell a house and offer owner financing even if you still have a first mortgage on your house? This is one of my favorite methods of not only buying property, but also selling property is a wraparound mortgage. And that's what this is called. It's also called subject to, okay? Now, what exactly is this? This is when the seller keeps the existing mortgage on the home and offers seller financing to the buyer and wraps the buyer's loan into the existing mortgage. The seller is now the lender, all right? It's gonna make a little bit more sense. I'm gonna show you an example next of a deal that I did that I sold a property, okay? Now, I purchased a property for $95,000, all right? I used a private lender who financed the whole purchase. So I basically came out with no money out my pocket, all right? So the mortgage that I pay to my lender is $95,000. He charged me 8% interest only, all right? So my monthly mortgage payment to him is $634, all right? Now, I had another investor partner, or I guess you can say friend. She had someone that basically didn't have great credit but had cash and wanted to buy a house. And she told me about it, and I said, you know what? I can sell him this house by using a wraparound mortgage. So I sold him the property for $130,000, okay? I offered owner financing because he could not get approved, and I used a wraparound mortgage where I'm going to wrap his mortgage around my mortgage, okay? So I told him to put down $30,000, all right? His monthly payment to me is $1,200, all right? So I sold it for $130,000, and I required a $30,000 payment, down payment. Now he only owes $100,000, okay? Now here's the results, all right? I received $30,000 profit up front. Okay, because he put down $30,000. And I get a positive cash flow of $566. Why? Because he's paying me $1,200 a month, and I'm paying my mortgage guy $634. So that's $566. All right. Now here's the kicker. Now, when the buyer pays me off, I will make another $5,000 profit. Why? Because I sold him the property for $130. He put down $30,000, so he owes me $100,000, but I only owe $95,000. So when he pays me the $100,000, I pay my $95,000, and I get another $5,000 at the end of the loan. Okay, that's why I love using this wraparound mortgage when I sell a property as well. Now I'm gonna show you a deal that I did where I actually use all three methods. I use a private lender, I use owner financing, and I also use a wraparound mortgage, all right? If you have not seen the previous videos on private lending and owner finance, please watch that, and then you can watch this, and then you understand a little bit more, all right? So basically, there was a deal. It was a 24-unit mobile home park, okay? I negotiated with the seller to sell it to me for $450,000, all right? I also negotiated for the seller. The seller has an existing first mortgage on a property of $200,000. All right. She pays $1,900 per month. All right. So I negotiated a wraparound mortgage. I explained to her what that was because at first she didn't know she can sell it because she had a mortgage. So I explained to her the concept of wraparound mortgage, and she decided to do it. So basically, she wanted me to put down $150,000. All right. So the sale price is $450,000. She has a first mortgage of $200,000, and she wanted me to put down $150,000. Okay. So I went to a private lender, and got a private lender to put up the 150. All right. And I also negotiated her. So now that's 350,000 between 200,000 first mortgage she has, and then 150,000 she want me to put down. So now there's 100,000 left to reach the 450 of the sale price. I negotiated for the seller not only to only do the wraparound mortgage, but also to do a second mortgage of an owner financing of 100,000 for 1 year at 7% interest rate. All right. So let me just run through it again. Okay. So the sale price is 450,000. She has an existing mortgage of 200,000. I told her, let's do a wraparound mortgage around that. I will put down 150,000, which I got from my private lender. And then I told her to owner finance the $100,000 that's left for only 1 year, and I pay her off at a 7% interest only rate. All right. So my first mortgage payment is $1,900 per month. I borrowed the 150. Remember that. There's no monthly payments because I actually did an equity partner sharing position in this deal instead of a note mortgage where I have to make a payment. So I'm not making no payment. These two investors are getting a profit share of the profit. The second mortgage that I negotiated for the 100,000 is only 583. All right. So the monthly income that the trailer park is bringing in is 7,000. All right. The profit of the whole deal was 4,000 plus. Okay. Because remember, my mortgage to her is 1,900 plus 583. That's almost like $2,400. It's making 7,000 a month. So my profit is 4,000 plus, depending on which the expenses are, each month is different. So this is a deal that I did all three methods: owner finance, private lending, wraparound mortgage. And I didn't have to come out my pocket, not 1 cent. It's all about structuring the deal and making sense to it and making sure it's a win-win situation.